Welcome to Invest. We talk about investing, finance, and professional development. So current time of 10:13 a.m. on Eastern Time on March 25th on Saturday. Hope you guys have a good weekend so far. I cannot believe March is almost over again. We are pretty much like 6 days away. I mean, 5 days away if you count today's already mostly gone, and obviously overseas is already the next day already. It's seems like we are getting older and older, faster and faster, or the other way around, whichever the way you think about it. But with respect to Ethereum, $100,753, up about 0.11% so far. The overall market, you could see that as of today, obviously the equity market is not open, but with respect to the crypto market, is also relatively muted. But this week has been, quite an interesting course of occurrences. We obviously, really dialed this back like about 10 days ago. We saw the collapse of SVB, and subsequent to that, we saw the collapse of another similar bank, Signature Bank, that also closed down due to the rate of the interest rates has heightened to the point that these banks' deposit level could not withstand. That eventually just had to be in foreclosure. Subsequent to that, we also have heard interesting news with respect to Credit Suisse being closed up because of the same issue, mostly on the European side of the region. But U.S. exposure is also something they had, right? And subsequent to that, we saw the collapse of First Republic Bank, which sold off 90% in basically less than 3 weeks. Which as I told you guys, I did buy in somewhere around like $13. So I'm down a little bit right now, but relative to people that got in at 140 bucks, I am in a relatively okay situation if I believe in the long term fundamental of the business. And subsequent to that, we heard the chronological next steps is that Credit Suisse was bought out, obviously by UBS, which is another Swiss bank. Also, First Republic was sustained by 10 other banks, right? JP Morgan, Bank of America leading the effort of infusing $30 billion into First Republic to make sure that they are here to stay. And it seems like based on the optical affectation that we see in the media front, we are expecting that First Republic to be here to stay, right? And subsequent to that, as we know, the 21st and 22nd was the FOMC meeting, right? Which we went with the 25 basis point afterwards. But something that's interesting is quite contradicting. It seems like the politicians probably don't know what the hell they're doing. Is that Janet Yellen mentioned that on the Thursday that um, the feds will do whatever it takes to keep the banks going with respect to the deposit issues. But subsequent to that, post the FOMC meeting, which was hosted by Jerome Powell, we also heard verbiage from Janet Yellen said that the Fed's going to be a little bit more cautious about that approach going forward. And they might actually not be in supportive of the deposit situation. So it was a little bit of a contradiction, I would say, which obviously drives some stir. And then as we close off the market on Friday, we have been just kind of levitating on the sideways fashion, not really doing much. So what we want to do today is basically, firstly, let's revisit some news to see what's going on. It seems like, the news are relatively regurgitation around, again, SVB that you see on the front page. And let me shift my screen a little bit. Deutsche Bank, with respect to its recent buyout of Credit Suisse. No, not Deutsche Bank. Deutsche Bank is another bank, right? But Deutsche Bank is in discussions because you see UBS, you see Credit Suisse, but Deutsche Bank is something that is a more of a German bank that they are in similar water, depending on obviously the deposit threshold that they have, right? And then these other news are really mostly just regurgitation news or same flavor. But I did read this article. I talked to 70 parents who raise highly successful adults. Five signs your kids is destined for success. That's an interesting article. I might be reading that later, but that's a little bit off topic. So let me just dive in technical without wasting more time. With respect to recording time of 10:18 a.m. on Eastern Time, we are at 1750, right? Basically gliding away from the leveling off, right? You could see that with respect to a daily, it looks looking quite bearish, right? It is looking like we're about to form a def cross again at the 55 out of 70 level, basically being sustained by the 1750 right now. But as you know, this elevations from the point of 1450 all the way to 1850, this $400 of elevation is something that needs to be corrected, right? And I think what's the next logical step is that we are gonna get a def cross, which will cross down for us to reach to back to a level that's more tolerable, somewhere around 1650 to 1550, if you may. On the weekly, you could see that with respect to the elongation as well, we are similar at 56 out of 70 with some level of separation. So what we need to do is basically find a way to kind of cross down first before we cross up, right? This green candle here is not going to be sustainable. We do need to kind of find ways to cross down, eventually cross up, right? And then on the monthly front, you could see that we're kind of landing at the 49 out of 70. So what this is saying is that as we get over Q2, we should ideally see some correction in Q2 and then see the elevation from here for Q3 from here. Bitcoin is showing similar affectation with respect to the landing at the 50 out of 70. On the weekly, we are looking for some sort of a cross-section downward. You can see that this is a quite long elongation at the 63 out of 70. On the daily, you could see that with respect to the def cross that we're about to form, this doesn't look like it's sustainable. So seeing a sell-off would be very logical as we see a more of a cool off as we are quite high reach on a daily right now. Let's take a look at the market front. We're obviously closed today, but this seems very much like a reverse head and shoulder, like shoulder, head, head, and we're forming the secondary shoulder right now. So this is relatively more of a bearish signal in the first half. But with respect to as we complete the revolutions of like cross down on the daily, on the weekly, we are seeing a bullish pattern on the weekly, so it's not terrible. We just need to cool back down a little bit to maybe a level that's a little bit more achievable at 38 out of 70 before we go back up from here. But I would say on a medium level we are bullish because this is a bullish pattern. But near term we are gonna be seeing some corrections because the market doesn't go in one straight line. It does need to oscillate. But it is indicating that we will be seeing some bullish pressure coming as the monthly is quite depleted. We are looking for a level of so seeing a bull market to begin sometimes around like later this year, Q3, Q4 would not be a surprise to us. And then let's take a look at some maybe something we took a look at recently. Maybe we could take a look at First Republic just to see like what's going on with this bank, right? So obviously the bank is extremely oversold on the monthly. It's at $12, right? At one point we were at $220, right? So obviously crazy oversold. Weekly it is looking quite dead as well. But it seems like the large separation and at the 17 out of 70s of even further oversold than what is supposed to be. Daily right now it is looking to land at 15 out of 70. So very oversold across the spectrum, huge discount on technical and a fundamental perspective. Ultimately, the question mark that we have is First Republic going to go bankrupt altogether? Is it going to foreclose altogether? And I've been having calls with some of the executives at the banks and looking at their balance of assets that they have. It seems like they're a little bit more conservative. Like they mostly have single homes, and I asked them questions around like venture debt exposure. It seems like they're not as exposed in comparisons to like SVB. So with respect to the fundamental of the business, it is indicating some good healthy signals. Obviously, despite what the public or the equity market is psychologically portraying it, but the truth of the fact, look at the balance sheets, looking at the investment exposure, it is looking like they're actually not as terrible as you think it is. So for me, it gave me some confidence into buying into the stock. So that's what I did. So I bought in at $13. So as just like logically speaking, right, as the market rebound on a macro perspective, you should technically translate into higher level than here, right? We're down 90%, which is quite crazy. But if you look at the fundamental, it doesn't translate 90% sell off, right? So which give me good confidence, and then look at the technicals, translates into a buy signal for me. Okay. So hope you guys have a good weekend. It's enough of the rambling from me, and really appreciate you for joining me on a day-to-day basis. And sorry for skipping the beats. I just came back from my trip in LA, just catching with some friends. And but yeah, let me know how I can help in the meantime. And have a good day. Take care.